India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call, starting a new week, a holiday-shortened one at that, midweek holiday for the 2nd of October. And of course, we're kind of kicking off a new month as well, which means we finished the last month and we finished a quarter. So, I mean, beginning of new things in that sense. Will it be new for the market as well? Or will we continue to roll higher like we have? That's the question. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good morning.
Hi, good morning. I realized looking at us, the colors, the blues, the pop, the flowers, it's all because the most important cue is Wednesday.
It's a truncated week.
It's a truncated week. But we have so much news to digest, right? So much going on around the Asian neighborhood. And then, of course, we have a new entrance on the Nifty. So plenty to get us started on this Monday.
Oh, absolutely. And I think we start with what essentially came through over the weekend because, globally, the big talking point, of course, was the turn that the Chinese markets were seeing. And we saw a fair bit of action on Wednesday, Thursday, Friday. And it did not stop. Actions kept coming in on Saturday and Sunday as well. So I'll start there. So China has essentially announced more measures over the weekend. Authorities essentially have asked three things. Authorities have asked, in line with what the central bank there, the PBOC has said, they've asked all banks to cut mortgage rates by the 31st of October. One. Second, yesterday there was a meeting, the State Council, chaired by the Prime Minister, echoed what the President said, President Xi said. And specifically, they vowed to speed up 102 key investment projects. These are not new projects. They were announced in 2022, but they've said they'll speed it up. And three of the top sort of tier one cities in China, Shanghai, Guangzhou and Shenzhen, they've announced significant sort of property loosening policies, essentially making it easier to buy property, lesser down payment ratios, etc. So these are the three things which have come through over the weekend as we hit this new week, that is Monday. Now, what complicates the picture in a sense, right, is the fact that China is shut for most of this week. So from the 11th to the 7th, from the 1st to the 7th, which is Tuesday to essentially next Monday, China essentially goes into national holidays, the Golden Week, as it is called. Hong Kong is still trading. So, the China proxy in that sense, a lot of Chinese mainland shares are listed in Hong Kong, and foreign investors prefer to trade on the Hong Kong market rather than the mainland market. That market will be trading except Tuesday. Tuesday, Hong Kong markets are shut, but they're trading otherwise. So those are two things. This morning, if you looked at what's happening with Japan, you'd wonder, well, whoa, 4% cut. But the fact is that the Japanese market had shut by the time election results had come out on Friday. And, you got a new prime minister in place, and the market there is concerned about whether, he'll kind of want to normalize policy and what kind of policies will he really adopt? Fiscal conservative, will he be fiscally conservative, etc., etc. So the market futures, by the way, on Friday were down 6% this morning. Cash is down about 4% or so. So that's Japan as well. So a bit of Asia. I mean, nothing very much from the US market on Friday. I mean, they were slightly down, but the Nasdaq was down 0.4%. Yields were here and there, but I mean, the dollar, I think, is what you should focus on. It's back in the support zone between 110.5 to 110.8. We are somewhere there, and a break below this. This is the, as we've said, 20 weekly and lows of 2023. You perhaps see a fresh leg down. And oil prices, there is this China stimulus. Of course, this what's happened in the Middle East over the weekend and Lebanon specifically. And oil is right there. There's no big pop or anything of that sort. So that's interesting to note as well. Now, in the U.S., you've got a bunch of data points which are lined up. And I think it will culminate with the non-farm payrolls number on Friday. And that will be the big number to watch out for. I'll just circle back and finish up with the levels here. So that we're trading. On Friday, the indices were down. Nifty was down. Bank Nifty was down. So we had a daily negative close. But we were up about 1.5% for the week. So if you're wondering where the weakness is setting in, we are still trading above the 20 and the 40 hourly exponential moving average, simple and hourly exponential averages. So there is no sign of reversals yet as far as the indices are concerned. Now, we must stay above the 40 hourly exponential, which is 25,970. I mean, as we keep climbing higher and higher, you got to be mindful of trailing reversal stops as well. And to my mind, from a very near-term perspective, that number is important to be held on to, 25,970. Now, on the upside, you basically have got to project targets, Fibonacci extensions, 26,521. We put this out earlier as well. We'll see when that happens. Nifty Bank, it closed around the 40 hourly exponential. Actually, we closed slightly below the 40 hourly exponential. We'll see if we stay below it. That's not good news. That is 53,841. We left off at 53,834. So just under that 40 hourly exponential. The supports here below the 40 hourly come in at 53,500 and then 52,900, and targets on the upside basically is the swing high, which is 54,460 or so. So that's essentially a quick picture. It's looking okay. Market's done quite a bit. Some consolidation would be nice. But the bigger question is, which many people are worried about, is whether, maybe too much is done and maybe there is a pullback due. And there you need to watch out for some of the levels that we put out, both on the Nifty and the Bank Nifty as well. Gift Nifty is indicating about a 60-odd point lower start. Surabhi.
Well, absolutely, Prashant. I guess it's all the headlines coming from Asia and two big markets moving in absolutely different directions. In fact, make that cut on Japan now almost 5%. That's the extent of the fall. And let's also pull up the dollar yen, because the currency markets had exhibited this nervousness on Friday itself, because the yen had leapt up almost 2% on Friday versus the dollar. Today, it's eased off a little bit, but nonetheless, I mean, it's still around that mark of 142 thereabouts. So what is the issue? Just a moment here. Shigeru Ishiba is the gentleman who has won the leadership of the current party that holds power in Japan, which is the Liberal Democratic Party. He was earlier the defense minister of the country. And he's seen as a bit of a hawk when it comes to monetary policy. And therefore, the market getting a little worried, the yen surging on Friday. But on the weekend, he made some comments to one of the telecasters, the national broadcasters, I think, in Japan, where he said that monetary policy must remain accommodative given the current economic conditions. And that gave at least the currency market some hope. But the nervousness is still very, very palpable in the equity market, as one can see. So that's the picture on Japan and how that's playing out. In China, the Hong Kong market continues to build on what was a tremendous week. There was a 13% rally in China. All put together in the month of September, the Hong Kong market is up 18%. I mean, no one comes close to that. And what we've got this morning is some fresh data. It's actually a pretty good data, manufacturing PMI. This is the official PMI number out of China. The contraction is reducing. So for the month of September, this official PMI is 49.8 versus 49.1 in August. So still contracting, but not as much. So that's the good news coming in. Speaking of data, I mean, the US market itself, usually September is a challenging month, but not this time around. It's the first time that the US, in all probability, today is the last trading day, will manage a positive September for the first time in 5 years. And the data that came in even on Friday, that continued to play out the Goldilocks scenario, because inflation, that's easing, and growth continues to be a little lackluster, you can say. So why do I say that? Look at the numbers. The PCE price index was up just 0.1% in August versus 0.2% in July. And the consumer spending number, which is the really important one to track in the US market, their consumer spending was up 0.2% in August versus 0.5% in July. So the consumer perhaps continuing to be, in a bit of a spot of bother. And that plays with the Goldilocks scenario. This is the situation on oil last week. This morning, there's a bit of a leg up on prices, around 72.5 on Brent. But whatever's happened overnight in terms of geopolitics, with the big headlines coming in, the Hezbollah chief, Nasrallah, being killed in those Israeli strikes, none of that has impacted the oil market, including the statement from Mr. Benjamin Netanyahu that Israel is not done. Because why? It's not impacting exact barrels in the market just yet. If anything, there's talk of Saudi Arabia increasing production, and that's keeping the oil market really well supported. So all things put together, the global backdrop is still very, very positive. Quickly coming back to cues here at home. Let's look at the fund flows. Foreign institutions, net sellers of around 1,200 crores, but massive, massive buying coming in from domestic institutions. Obviously, a lot of block trades as well there, but nearly 7,000 crores of buying coming through. In the month of September, it's the return of the large caps. That's the biggest trend that sort of stands out in our market action. Almost 4% up on the Nifty, mid cap about 2%, and the small cap index is actually slightly negative. And right in step, we have two new Nifty members joining the index today. The rise and rise of Trent, the stock finally enters the Nifty. as does BEL. And of course, Divi's and LTI Mindtree go out. So it's all about the large caps. And we'll see if this trend continues in October, Nigel.
Well, that's right. For me, I'm watching 3 big points. And I believe that the buy on dips on the Nifty, that's intact till lower levels get taken off. So that's point number 1. The problem is, though, the gift Nifty is indicating a bit of a pullback today, maybe a 60-point downtick because geopolitical issues have crept back in. The good news is that crude oil prices are virtually unmoved. And point number 3 is, there's been that raging debate. China is bouncing back. Will it be a threat to India? Well, Kotak has put out a note. They believe that China may rally. It may so. But they don't believe it's a big threat to the Indian market rally because domestic flows are very, very strong and earnings as well is very, very strong. So those are the top 3 points. Let's move on to what happened in Friday's trading session. Why did we end lower? Because the Nifty Bank, that took a bit of a breather. That was down 550 points. But there was more unwinding of positions that we saw on the Nifty Bank itself. And I think in the near term, you want this 53,500 odd mark to hold out because the rally has been very, very ferocious. So the 20 DMA is much deeper, but that's the first line of support that you're looking at. What about the FIs? Well, the FIs, they added some long positions. There were some mild shots that they covered out as well. They remain aggressively long with 81% of their positionings on the long side. The FIs, well, they're net long, 3.5 lakh contracts on the long side. You have the clients that are net short with 2.5 lakh contracts on the short side. Give and take everything, let's pull up the options data. And this is a truncated week, so you only have a couple of trading sessions before these contracts expire. And normally you see, a bit of a short straddle that could possibly take place. And there appears there's a strategy in place. The 26,250 call and put, fair bit of open interest build up. You put it together. The premium you pocket is around 300 rupees. So you add 300 rupees to 26,250 and you deduct it from 26,250, which gives you the broad range that you're looking at. So this is the tightest range that we're looking at going by that option strategy. But it's going to be all about stock-specific action, right? So I'm looking at, a couple of them. One is the Flipkart sale. It saw a very, very good response. I was reading a CNBC TV18 article on our digital platform today, and the response is very, very strong. So I'm looking at a couple of stocks, Delivery as well as Blue Dart. Logistic companies could be in focus, both these two. The other one I'm looking at is Reliance Infra. They've got a favorable verdict from the Kolkata, courts out there. They've ruled in favor of the company. And we're seeing that the stars are aligning for this one. Suddenly people are talking about the assets that they have. They've got some infusion as well. And the 20 DMA is deep at around 260. So not a one for the faint-hearted, but Reliance Infra seems to have been getting its mojo back. So I'll keep an eye out on this one as well.
All right. Okay. So plenty to track as this week kicks off. Let's actually get you the equity call of the morning as well. Alexander Redman of CLSA says China policy went into overdrive last week. He says the recalibration in scale and urgency of stimulus was applauded by investors, yet questions persist. Firstly, the motivation, he asks. Is this a quick fix for 5% GDP in 2024 or the beginning of a braver, more innovative solution for sustained growth? Secondly, on results, Alexander asks, will last week's initiatives be sufficient to break the deflationary deadlock by reigniting domestic demand? He says the answers will dictate whether the equity frenzy is the 5th bear market rally since March 2022 or something grander. He says they resisted underweighting China in the belief that the market offered the greatest self-help opportunity in the emerging market landscape. But for now, he says that they rent rather than buy the rally, staying benchmark and exposure larger than most funds. So that's the CLSA call coming in, still asking lots of questions on the durability of the stimulus.